Aloha, lads and gents. Nice to see you. Welcome to my first live stream here on YouTube. Welcome to my first content I ever launched to the public. So it's a pleasure to all have you in, whoever it is actually. So obviously, because it's my first activity on social media, I first need to get used to the technical setup. So especially when you are in some located in some awkward locations and circumstances, like I'm currently at the car, which is actually my studio. So we will definitely stick to this. Perhaps first things first, my name is Julian, and yeah, today it's almost 10 p.m. CET. So, and we are right before the launch on the publication of the second quarter earnings call of HIMS and HERS, a healthcare company straight out of US. Guys, I'm already 4 minutes late, so I need to be very quick now because I'm not only excited because that's the first call I have here on YouTube. A second reason, and maybe on the same level, a reason is that, yeah, we're talking about live calls. You know, I'm quite bullish for this company. I'm invested in this company actually not that long, maybe roughly half a year, but I thought about investing in it at least 1.5 years. And this stock really has some way behind, has some history, has some chronic, and I think it was almost below $4 located, and now, and on the peak 1 or 2 months ago, it was roughly $12, and now back on roughly $8. So it's a hell of a ride. It's really roller coasting. I can tell you that. And yeah, so I'm I'm a tourist driving this roller coaster basically, and I'm quite bullish for this stock. Obviously, there's no right, there's no wrong, and you need to figure out your own way, make your own estimation, your own evaluation about stocks. It's your money. You need to make decisions about this. I'm not an advisor, so yeah, always have a little bit distance to what I'm telling you. And of course, there's no guarantee for any correctness what I'm stating here at my call. However, as you can see, hopefully it's working. Maybe it's not. So yeah, it's working perfectly. As you can see, the markets are already closed, and now it's just a matter of time when the earnings will get announced on their website. So I prepared a few different tabs for you guys. As you can see here, the area of the investor relations side of HIMS and HERS, where the numbers will get announced, as you will see here, like you can see on the last year, on the last anno. So Q1, Q2, Q3, Q4, sorry guys. And the same will appear here as well. So we are now waiting for the next column, which is then called obviously Q2, because we're talking about the Q2 earnings. Q2 earnings. Sorry. So just give you a brief introduction about this stock. So what you can see here basically is one part of HIMS and HERS. That's the HERS part, and the other one is the HIMS part, guys. Yeah. So quite simple actually. So they're providing healthcare services, so products which are almost sometimes even custom made, sometimes just mass products for a little bit more, let's say, diseases what you in public don't want to talk about. Yeah, this is what they provide for the society, and it's separated in this HIMS part and this HERS part. HIMS obviously it's the medication for the men and the males, and HERS for the females. And you can see females is primarily focused on anxiety, depression, and hair. So all of these products are quite products which you should use before it's getting very bad, let's say it like this, and you try to avoid by using these products to get more, for instance, mental disease and heavier problems with it. And the same on the healthcare side for the males. So erectile dysfunction, ED, hair loss, anxiety, depression, and yeah, several other products. The same here. You have as well a little bit larger portfolio you can go for. And lately, even they announced at the end of last month, so roughly a week ago, a new product, which you can see here, basically, yeah. So that's something really new, as far as I know at least, but I'm not so involved into this kind of topics. But it's a blend, yeah, it's a blend product based out of ED, where they're already quite experienced with, yeah. So they have, for instance, here ED mints, which you can take like just a drop, relaxed, you have fresh air, and then you are ready for doing your job or whatever you like to do. And then we have a combination, a blend out of ED product and as well a product for, you can see here, cardiovascular health, you know, so to lower the blood pressure. And yeah, so they try to really develop further this business. Yeah, so that's what HIMS and HERS is doing, below other things, you know. But let's fetch it up together again and sum it up. HIMS and HERS, healthcare service provider for males and females, own products which are even customized on the specific need of the clients, and even some additional healthcare service are involved. So you can even call the doctor through HIMS and HERS and yeah, get your prescription done, you know. They are present in the US and in Great Britain, and who knows, maybe they will roll out further, you know. So in my country I am located in, which is Germany, I can imagine that the demand of this kind of products and of their services is definitely existing as well. But of course, that's more on long-term future and based on local regulations. So let's check again if there are already some numbers out. I hope not. I hope not, because then we can discuss a little bit more other details. Okay, great. Everything is fine. You can see, let's check the aftermarket price, if it's already updating over here. So I take a quick sip of some water to go on a little bit longer for you guys. Okay, let's go. So what is important for me today? Yeah, so for me today, important is definitely a few metrics, a few major aspects about this title, about this company, about this stock and the enterprise behind, you know. So first of all, and the major priority is basically the profitability, and that is, I think, for the most investors nowadays, as you know, the main focus when we talk about stocks. So we all know that the inflation is a certain inflation rate is existing, you know, and interest rates are maybe stable, maybe will decrease a little bit in the future. We will see. But at the end, they are definitely higher than 1 or 2 years ago, when a lot of these kind of stocks had a very high level of evaluation. And so basically, now the market, of course, in a lot of perspectives, is want to make sure that the stocks are solid, are stable, and economically tough structured, so they can basically grow on their own, you know, and make sure the existence is secured by their own income, by their own profitability. So a lot of people obviously want to see that HIMS and HERS increasing their profitability, and because this is actually not that strong at the moment. You need to know that HIMS and HERS is my largest position in my portfolio, with roughly 12,000 euros or $13,200 US dollars. So for me, that's the reason why I'm a little bit extra excited, not nervous at all, but excited. I like this feeling. That is as well something what I like about stocks. Obviously, yeah, it's something what can make you a little bit more financially free or stable, you know, especially when we talk about pension and later periods. But yeah, for me, it's as well, it's fun, it's excitement, it's a hobby, and some kind of, yeah, for sure, emotions are involved as well. So that's great. So let's see. Then the second point, and it's a very important point for me. So the first one with the profitability, actually, it's not the focus I'm setting. For me, it's important that this kind of stock is growing. That's for me the major focus I want to set, or which I would set when I talk about make analysis about the stock. But for the other ones, it's more profitability, you know. So for me, it's more revenue growth. For the market, very likely it's more profitability. And but the second major aspect, and for me the first one, is definitely the so-called marketing flywheel, you know. So you need to know that HIMS & Hers is very, very active in investing money to promote their goods, to promote their services, and they're quite successful with this, you know. They have a lot of VIPs, popular persons, you know, people of interest in the US, for instance, football players, actors. You can see here, to go back to their website. You can see here. Actually, I don't know her, Kirsten Bell, but very likely she is an actor, and famous one, a popular one. So, however, so they're investing a lot of money in this marketing sector to promote their goods and heat up the oven of sales. And yeah, so what I want to see is that now there's some kind of flywheel is getting in momentum, you know, and that's the headline of this call, actually, you know, because we need to see that per dollar they earn, they should invest less money, you know, or let's say per dollar they invest in marketing, they should in the future earn more money, make more sales, you know, and they should create a certain dynamic, a certain momentum, you know, which really creates a very favorable dynamic. And next to them, I try to check again the numbers, guys. I try to stay up to date here. Cross fingers that they are not published now. So let's see. Again, update the website. Maybe. Okay, I can tell you I'm not sharing it now, but I can tell you that it's not uploaded yet. Okay, let's go on. So the next point, for sure, first one, profitability. What is the development about this? So earnings per share. The second one is marketing flywheel. For the same amount of marketing investments, more outcome in terms of sales and profitability. And the third point is definitely the further rollout of the product portfolio. So to tell you the truth, as I already mentioned, they just rolled out a new product type, you know, or when we talk about these blood pressure products and this plant combined with ED type of products, you know. So this already happened recently, yeah. So they had the plan originally to launch 1 to 2, 3 products per year, I think 1 till 2. And in the past, as far as I know, maybe I'm wrong, you can correct me, maybe I'm wrong, but as far as I know, it was tough for them to keep this timeline. Or let's say it like this, maybe they didn't want to keep it because the existing product portfolio was that successful and was working out so well and created so much dynamic on its own, you know. So, however, this is something what we definitely need to observe and keep in mind as well, you know, but this is a little bit more in the mid and the long term, you know. So the further outrolling or rollout of the product portfolio. So, for instance, which is a lot of analysts mention, or people who are involved in the market, is the so-called fat burner business, you know, fat burner establishment, some other medical providers doing great in this category, in the sector. And yeah, some investors of HIMS & Hers asking themselves, why not HIMS & Hers, you know. So this is something what a lot of people expected. This will quickly maybe quickly get developed and established, but as you can see, they went for the blood pressure solutions. However, so let's go on. So first, profitability. Second one, the marketing flywheel. Third one, product categories. The fourth one is the competitive situation. So you need to know, of course, there are more experienced, well-known players in the market, medical suppliers of goods, you know, or like Teladoc, which was in the past, especially in the Corona times, a really high evaluated player with doctors who making disease or who figure out what kind of disease the patients have, and then you can just order basically quite similar to HIMS and HERS, order the medication just by the web services. And of course the other very regular competitors, producers of medicine, pharmacies, etc. Even Amazon is something which is definitely it's definitely a risk, you know. It's definitely something what you need to have on your radar. And so this is what I definitely need to mention, but I don't think like the last metric, product categories, the same here, and the other two, which I will tell you in a few seconds, they are not that relevant today. Yeah. So competitive situation. Next one is, of course, no legal disputes and bans on the products. Something which is really difficult for me to grab, and I guess for the most investors it is. So you just need to keep fingers crossed and hope that there is no trouble going on. And of course, it is not affected today by something like this, the earnings call. But however, and the next one, the last one, is definitely an aspect which can be a driver for the future for this business, is the regional expansion on the long term. You know, as I mentioned already in the beginning, now present in the US, now present in Great Britain. You know, they acquired a company as well in Great Britain, I think for hair products in the past, but don't nail me on this. And yeah, who knows what kind of potential is existing when we talk about the regional expansion in the future. But however, to sum it up today, it's about really the profitability of development first, and the marketing flywheel effect, which we are looking for. And now let's see again. Now it would be not that bad actually if the numbers will be online, but as you can see, they are not. Let's check if the market is already. Oh, we can see here already aftermarket 4.3% up. So maybe 7.4, 7.5%. Let's go, guys, man. I mean, of course, we're always investing for the long term, whatever means long term. Yeah, for some it's a year, for some it's 5 years, some 10 years. But it's always good to see some positive development, especially for my first live stream. Guys, here almost 10% up. Man, the rocket is launching. The rocket is launching. Let's check. If we had more time, I would tell you a little bit more about the chart and the lately development, which I already stated as well at the beginning. So, but let's check on investing.com, which is the website I sometimes use for purposes like this. If there are some numbers online, and you can see if they would already be launched, very likely you will see them here and here, where these two small stripes are located. So we need to wait a little bit longer. And I guess 11%, who knows? Wait, let's check again. The website. So yeah, now they are publicated. Let's give me a last quick sip of my water, and then we step right into the numbers. I prepared something for you so we can directly get better feeling about the numbers now, and the numbers of the last quarter, and the numbers of the quarter 1 year ago, because of course there are seasonal effects. So let's start. It's like opening a Christmas present somehow, slightly, kind of. So let's go for it. There it is. I hope it's working so far, so good. I think it looks good. Okay, what we got here. Second quarter, as you can see. So top is always most crucial numbers, basically, at least for the major society or most people. So we can see 208 million US dollars revenue. Expected was, I think, let's check again, but I think 205, 205, as you can see here. So that's very solid. Revenue growth is definitely in line. So there is nothing what we are missing over here. So again, let's fetch it together. 208 compared with 205. Everything in line, everything fine. Okay, the beat could be great, could be larger. Honestly, they could be larger, but that's absolutely in the area of green. Okay, so net loss of 7.2 million, adjusted EBITDA profitability of 10.6 million. Okay, right. Subscribers grew, fantastic, 1.3 million. But guys, raises full year revenue. That's already something which is really catching my eye. So they're raising the guidance to of 830 million US dollars to 850 million US dollars. So by 20 million. That's already a strong sign when we talk about revenue growth, especially in the nowadays economic situations and circumstances. Of course, some businesses going better, some worse or less good. But to raise this kind of guidance, always good. And the same you can see here, and that's really very likely the reason for this. Adjusted EBITDA guidance is as well. Full and adjusted guidance to range of, okay, they raised this as well to 35 till 40 millions. So everything perfect. Let's check again. Let's check again the current status of the 16%, guys. So yeah, I'm quite happy. I mean, and honestly, that it's always good to have a positive experience, even if not one earnings call is changing anything. Let's say it like this, but honestly, first stream, and it would be not the best experience for me personally that I start to cry in front of you guys, just because of I'm losing my full position or half of my position or 20% of my position, which lately a few times secured. You know that some stocks get hit very strongly. Okay. However, but we need to scroll down. There's a lot of text, but I want to scroll down for sure. And I want to focus, that is the part I like. This is what I want to see. Because we can see here the two major metrics as well. The number of subscribers, as was already stated above, raised by 74%. Amazing. And the monthly online revenue per subscriber, on average, raised by 4% from $51 to $53 in the past year. All right. And you can see, okay, I think that is actually for me not really convincing so much. You know, that's not too heavily positive. But I will go in 2 or 3 minutes later into the detail here, because I prepared some Excel document, very simple one, to just make a quick comparison. And here you can see AOV, which is the average order value. Okay, and that's great. That's really great, man. That makes the difference in my perspective, because to see really that, of course, there's some inflation going on, but to see that from 2022 to 2023, the average order volume is going up by 22%. That's great, man. That's just showing that there are some synergies going on. Maybe the people are ordering more products per basket. Maybe they ordering some different products and adding them. So cross-selling, upselling, all of this can be an aspect in this area, in this ratio, in this regard. So that's for sure great. Online revenue, of course, it's majorly heavily driven by order online revenue. The wholesale revenue increased as well, 10% as far as I know. Look, guys, let me check again the one from last quarter. So that's the, sorry, I need to orientate myself a little bit. And as you can see here, yeah. So the last quarter, it even decreased by 9%. So now increased by 10%. That's great. And you can see here, last quarter, the increasement was 15%. Now it's 22% per order. That's simply amazing, guys. This is how it should be. And let's check now. So we can see revenue guidance is lifted up, or was lifted up. The profit side looks quite well. We can see that the number of subscribers grew on a very good base. Let's compare this as well with the numbers of last time. Okay, last time 87%. So, and let's check again 1 year ago, maybe, just to see it one time. Change. Okay, now I need to calculate. Okay, let's skip this. But however, so that's good. But now we need to take a look on the marketing flywheel. That's for sure the next critical parameter we need to focus on. So expensive, guys, operating expenses. There we are. You can see here operating expenses and the marketing. So, and what we got here is marketing increased by 47 millions. Okay, and now this is something what, of course, I can't do this now in my brain. I need my Excel tool, which I specially prepared for this call, guys. So what you can see here, so you have seen the numbers. I now will copy them quickly into the Excel sheet, and which you can see here. Then I will explain you what this Excel sheet is about. Is it working? Yeah, it's working perfectly. Man, I didn't expect the technique will be that stable, but sometimes you are lucky. So let's take another zip. Didn't expect the stream will be online that long. I really expected we will cover this quicker. However, let's go on. So you can see this Excel tool, and there's not so much I need to add right now. I need to add the revenue of this quarter. Let me get this out very quickly. So we talked about 208 million, if I'm correctly. Yeah, 208 million, 207.9. So let's put this in. Okay, we got this. Then we will add the earnings per share. One moment, guys. Already almost 18% up the stock. So it's minus $0.03 per share. Let's add this right here. And then we are soon ready to go. And the rest will be done by the magic of the tool, I hope at least. So I use it as well. Now I'm getting nervous. As well the first time by myself after creating it. Especially for you guys, as I mentioned. Okay, and the forecast. And the forecast we can get as well out of the... Sorry that you just see now the Excel sheet, but it's a little bit complicated to work on a small computer, especially the first time, as I mentioned, but give me a minute. So the expected revenue for the upcoming quarter, financial outlook, is 270. Wait, I share this as well because I don't want to tell you anything which you maybe will doubt later on. So here we see the guidance, the expectations for the upcoming quarter. So rough 270 million to 222 million. So it's 200, the mid, I think 290.5 million. I will add this quickly as well into my Excel tool. And the last one, it's just about reflecting. Okay, perfect. And now we're adding as well the marketing numbers. Let's step back to the tool. So we are almost done. Very close to the target. Okay, guys, give me a moment. Thank you very much for your patience. And so what we got here, the number of subscribers. So 1,209. Oh, that's not the correct one. We need to be careful. I need to be careful, guys. It's late. It's late, and I have behind me. I have a full day of work. So please, I asking for a little bit understanding for the situation. So here we go. The numbers of subscribers: 1.3 millions compared to roughly one. Is it right? Yeah, perfect. 1.2 billions. 1.2 millions. 1.2 millions last quarter, man. And now we're talking about the marketing expenses, as already mentioned. And yeah, it was quite a large raise, but 107,219. 107,219. Let's enter them. 107,219. Okay, so you can see now my Excel sheet, I guess. And let's give you a little bit more color to this. One more zip, guys, please. So many thanks for your patience. So as you can see, here are the numbers of 2022. And here are the numbers so far of 2023. Even when we talk about the guidance, as you can see here, roughly $220 million revenue is expected. And yeah, what we can see here is that actually I hope for something like a little bit more revenue. I hope that last year we bet the guidance 1 year ago by roughly 10 millions, and I hoped for it, crossed my fingers that we will raise the bar on the same level. So I roughly hoped, the expectation was 205 million. I hoped for 250 million, but anyway, 208 million is a bless, and the guidance raise is as well just something what you really likely to welcome. So we can be happy about this. What is great, and what I told you even before we started, is on where the major focus is by the investors is the earnings per share, yeah, the GAAP earnings. And what you can see here, of course, we are still negative, but we're getting closer and closer to the finish line of being neutral and catching the break even. And as you can see now, we're talking about a difference of 2. So expected was -5 cents per share. Now we reached 3 cents per share. So that's definitely a beat. And that's something, when we compare it to last year in the same quarter, it was getting more negative, the earnings per share result, by 2 cents. And here it's getting positive by 3 cents. So that's just amazing. And as I mentioned, very close by 3 cents minus. We are very close to the finish line, very close to the break even, which is what I guess, at least what I assume the market wants to see. And now let's go to the second point. So this was the EPS and the revenue growth. Overall, everything, in my opinion, on a very good level. But now we're talking about the marketing flywheel. This is the part of this Excel sheet here on the right, top right side. And so, ladies and gents, so last quarter revenue, 190 million. This year, roughly 208 million. Marketing, last quarter, roughly 20 million less. Subscriber, roughly 100 million less. Okay, and when we compare it now, last quarter, we per dollar, per subscriber, sorry guys, per subscriber, we invested, or HIMS and HERS invested roughly $80. And now we are on a base of $160. I hope my calculation is wrong, because that would not be that good in my opinion. But no, it's good, because of course, the bigger the better, of course. And I think what I just did wrong, my bad. It's like in college, everyone has his strength and its weaknesses, but at least you need learn out of it. And as I mentioned, first live stream. So what you can see here, okay, very, very good. The revenue per subscriber was increased heavily by roughly $70, $80. So doubled up. Can this be the case? Doubled up, man, that's crazy. Is it really the case? Man, yeah, man, it's a simple calculation. It should be correct. Okay, I need to trust my calculation. So, oh, wait. Okay. So, guys. So now it's correct. Okay, we are more or less... Okay, at least I have a little bit of experience and competence. So as you can see, we are more or less on the same level. It increased slightly by $2, $3, $2, or let's say 1.35%. So that's definitely not so much development in my opinion. But let's take a look at the marketing and marketing per subscriber. And now as well, of course, I need to restructure it. Wait a moment. 0, 0, 0. And now everything should be perfect. Okay, and that's actually something what I honestly doesn't like to see too much today, you know, because I hoped that this marketing flywheel, as I mentioned, get a certain dynamic. And if I'm not missing something heavily, and as you can see how I create my Excel tools, maybe I'm missing something, the chance is definitely present and existing. But anyway, I see that more marketing spent per subscriber took place, and that's not actually development I want to see. I want to see here a minus, not a thin minus, even if would be fine, but definitely not some plus like almost 2.5%. Yeah, and the same with the revenue. Okay, that's fine. That's cool. Of course, would be better if the revenue per subscriber would increase more heavily. Anyway, so let's talk about let's sum up all the details we have discussed in the past roughly 30 minutes, 35 minutes. You know, this healthcare service provider, HIMS and HERS, I think the market liked the numbers. You know, sometimes you like the company, but the market doesn't like the stock behind, you know, or the market doesn't like the company. And today, let's check again. Let's check again the numbers. The current price, 16%, I guess. Today, the market likes the company, HIMS and HERS, and it likes the stock. Yeah, so that's always, of course, the best circumstances for a good investment. I'm quite satisfied. I mean, you can see the numbers are green. That's important. Most important, I think, for the market is that we definitely getting closer to this point of break even. For me personally, I would definitely somehow prefer to have a higher increase of revenue. I would prefer to see when we zoom into the details to see that less marketing investment was, or marketing expenditure was took place per subscriber, and I would see as well that more revenue per subscriber would get accomplished or was accomplished, and that's not the case. But however, who am I? And I should be just happy and satisfied for a quite positive outcome today. And guys, I really hope that you liked my stream today. As I mentioned, it's not even the first. I didn't start with a video which I recorded, which I cut and perfectly animated, whatever, and had a lot of tries and then loaded up. I just started with the hardcore rough modus and jump into my studio, my mobile studio, set up everything quickly, hoped it worked out somehow. The connection to my mobile phone, the mobile connection is stable. I see the train is crossing in front of me because I'm a little bit on a more darker, isolated area, so not some pedestrians, even if it's quite late, somehow disturbing me during the stream. But however, I'm very satisfied with everything about the numbers, about my largest position, as I mentioned, with now a little bit more, but before roughly 12,000 euros, 13,000 and something dollars. It's not about a little bit more or less. In this regard, I think it's more about being patient and taking care of the evaluation. Let's see what will happen with the other more long-term and mid-term aspects. Mid-term, the rollout of the further product portfolio. When we talk about the long-term, establishing new regional markets, making sure the level of competitive is in control, competitiveness is in control, and of course as well, no problems with any regulations or whatever, you know. So of course, always I'm not an expert in medicaments, in RX, in OTC, in pharmaceuticals, and for me, it's hard to evaluate this business very strongly in detail when we talk about a technical level. And so there, just in a lot of other investment cases, like other investors, you need to just cross fingers and hopefully you need to hope and trust the management, trust the staff, trust the company that they're doing the stuff right, take it seriously. And yeah, at least I have the feeling HIMS and HERS is doing this, yeah. So again, guys, thank you very much for joining the stream. I didn't even check how many subscribers or how many viewers joined this stream. If it's only one, I would be already happy, or maybe even 0 would be the best. So some a little bit more, slightly more embarrassing moments will not get recognized by other people. However, I'm very happy with this first stream. I will upload in the future continuously new content on my YouTube channel, on Instagram as well. So you can search for Essence of Capital, subscribe, and you can like it, of course. And yeah, if you subscribe, you can be one of the first ones, or let's say you can be one of the few who can tell you are one of the first ones who supported me from the beginning, you know. And that is something which, of course, counts for me even more heavily than anything, because as you know as well, when we talk about anything in life, the start is always the most difficult one. And so yeah, appreciate that you joined. And yeah, looking forward to the upcoming streams, videos, and we will see how everything will develop. All the best, and have a set